it's been an honor. It's been a journey. I truly believe that we've grown together. But one of the things that I want to ask you, because I know a lot of people don't understand, is how much you guys really target VA customers. Like that's your guys' thing, right? Because one, most people don't understand that there's guidelines that the VA puts out, and then there's guidelines that each lender puts out, right? And you guys really try to adhere to what the VA actually puts out.
Yeah. So
right,
we're just gonna go right into it. I mean, like
absolutely,
there's no foreplay. We're just gonna hit right into it.
No.
This is all business. All right. So let's start there. Whenever I tell this story, when I'm communicating with a customer first time, a lot of times I just like to kind of give them a little bit of a backstory. And Mortgage Solutions was founded by a veteran. So you got to first understand that we're going to come from a much different perspective, right? Based on his experience, he knew that there were some shortcomings in the mortgage industry. And the one that was probably, it had the biggest gaps in it, was the opportunity for veterans to buy. A lot of banks and credit unions in different places, they use the VA loan as like an a la carte item on their menu, right? Yeah, we do those. Yeah, we do that. We do this. And by the way, we also do the VA loan. Right. And so we look at it totally different. I mean, that's really our primary business. Well over 50% of our business is VA transactions. And our office is closer to about 70%. And again, that's primarily the conversations we have with realtors. So we always start out by telling that story. And because we're a veteran-owned company, we look at it totally different. We try to do it the way VA intended it. VA is very lenient because they understand that the military lifestyle can impact certain things, like your credit history, right? Sometimes it's tough to make payments when you're not there because you got deployed. You put everything on auto pay, but you forgot one.
But you forgot that.
Right, you forgot that one. And there's a lot of things that happen too. People get deployed or they're on TDY, which is just temporary, right? It's not extended. You miss something, right? Things can happen. Or, and everybody does this eventually. The military is not forever, right? And so you have to transition out of the military. So when you ETS, right, it's the end of your term, you have to transition. And sometimes it's tough for people that are coming out of, different MOSs or job titles, right? Some of that stuff doesn't convert so easy. They struggle a little bit trying to make that transition. The military has done a lot in the past years to kind of help with that transition, a lot of skill training. There's some really great programs out there where military people can actually start working almost a year in advance for a company. That's a whole different thing, but it's really cool. But when you're transitioning, there could be a tough time there. And so things can happen credit-wise that might prevent you from, having good credit scores.
Right.
And then you turn around and you go try to get a deal with someone that just says, yeah, we do VA loans, but then they have so many overlays.
Right. That makes them not able to get it.
And just so you know what an overlay is. So you take the guidelines, right? And I printed this out just for effect at one of the classes I taught. And it's like 612 pages, two-sided. So it's like a lower ream of paper.
It's like, no, I'm good.
Like I had to order another ink cartridge. And so I did that so people could see this is the guidelines. Then lenders turn around and add more guidelines to that. That's the overlay. They're putting it on top. And some of them are quite extensive. The most common one you're going to hear is credit score, right? I do a lot of stuff on TikTok, and
he's TikTok famous. He is. It's like millions of views.
So, I think the one that has the most views has 7.2 million views. So that's pretty
good. I'm lucky if I get
solid.
like 7 views.
I'm 2 of them, so I have 2 profiles. I watch it twice. So there you go.
So there you go.
Good.
I'm good.
I'm down for 2. So we get a lot of questions, right, about the minimum credit score. I called somebody and they say the minimum credit score is 620, or I call this person, they said 600, and I hear all these different scores. And a lot of times I say, just DM me. So send me a DM. I'll send you the link directly to the VA lender handbook, and you can look in there and you'll see. I direct them to the chapter, the page. I don't usually get a lot of DMs back after that, like, oh yeah, you're right, I'm sorry. That usually happen that way.
No, usually most people, they don't like to know that they were wrong.
Yeah, and it's not a
right.
It's not a right or wrong thing,
right?
It's not a.
We're just trying to give people information, the knowledge, right? Because the knowledge is powerful, and I think that's what people don't understand is how powerful your guys' source. Because there's 500 lenders here local,
Oh,
right?
at least.
It's ridiculous how many people, just like realtors, there's a ton of us, but it's the knowledge and it's the power that we have that, hey, I have call mortgage solutions. Why? Because I almost know that even if it's a sticky deal, you guys can do it because it's not about that credit score, right? Like you can tell the story of why, what happened, right? And you can, that's the benefit about your company is you're able to dig into it and you're able to even have people that if you question, right, you have someone that you can call and be like, hey, take a look at this file and see what you think, right? It's not just a cut and dry, you're done.
Yeah, well, I mean, the credit score is a line in the sand, right?
Right.
And you really can't make exceptions to that. Once you draw a credit score line, you really need to honor it. And because you in the mortgage world, we have a tremendous amount of compliance. You guys have compliance.
Right.
We have like compliance, right? I mean, it's like all the time. And so what happens with a lot of lenders is it really just comes down to their appetite for risk, right? How much risk do they want to take? And even though the loan is insurable by VA, a lot of them just don't want to take the risk because you got to understand that when you're loaning money out, whether you're doing it on a warehouse line and then transferring and selling it, or if you're retaining it, or there's all different things that can happen in there, but it all takes cash. And a lot of companies will just say, hey, we've only got this much money to work with. Let's,
but you guys service those loans.
We do.
You service them. So if they don't make the payment, you make the payment.
You just made.
I mean,
I'm gonna let you know right now. If you're watching this, not very many people know this. Okay, when a loan goes in default, yeah, because the customer is not making the payment, that doesn't mean that the mortgage company is not making mortgage insurance payments, paying the end investor, right? So that's happening, and that was a big struggle. Like during COVID, there was a lot of companies that were just bleeding cash. Because they were having to do that. There wasn't a break for the lender. Right? We didn't get a break. Well, with COVID, the customer doesn't get to make payments for 6 months, and you guys don't either. Now, they didn't work that way.
No,
That's not the way it happened.
Someone's making that payment.
But again, that's where it comes down to, where a lot of people say, well, you know what, we don't want to take that risk, so we're going to draw the line at 620. I think where we really, really shine is that we like manual underwrites. And so there's two ways that loans are really reviewed, right? There's an automated approval. So you have Fannie Mae, Freddie Mac, they both have their automated underwriting engines, and most people dump all the stuff in there and they get an approve or they get a refer. Approve means you meet all the guidelines. It's typically a good loan. Refer means, hold on, underwriter needs to take a look at this one. There's some things on here, some concerns. We love manual underwrites. I love manual underwrites. It's the old school way, the way it used to be done.
You actually have to look at everything.
Look at it, right? and you can start developing a story. And I could give you tons of stories. We could be here for like hours, and I could give you some of and some people said, that's crazy. Like, how could you even do that? But it's because if you can tell a story, and not just a story, right? It's got to be documented. You got to document it.
You got to prove it. You got to show it.
Sometimes the things with the medical stuff gets a little bit wonky because there's HIPAA rules. We can't be like, oh, give us your medical bills. But, if you're off of work, right, then you got medical collections, right? There's other things you can kind of tie the story together. So we spend a lot of time, really telling the story. We do those with letter of explanation for credit. That's usually very common. Almost every one of our files has that in there. I always, when I'm first talking to a realtor we haven't done business with before, I never want to pin myself in a corner and be like, hey, well, send us all your low FICO stuff, because we do it all. Right?
Oh, absolutely.
And our pricing is great. One of the comments I get all the time on my TikTok stuff is, oh yeah, but the rates are going to be ridiculous. There's a big difference when you go buy a car, right? You buy a car and you have bad credit, you're going to pay 21, 22, 23%.
Facts.
Right? It's going to be like 3 times the market rate, probably 4. It is not that way in the industry.
You're getting a car warranty that you are signing up for, or you're not getting the deal.
Right. Which happens also be illegal. So if anybody tells you that you had to buy a warranty to buy the car, that is not true. So facts. Don't do that. Or Credit Life or any of those other things. You don't need the mop and glow, whatever they're selling.
It's the key replacement.
It's the key fob. Key fobs are $8,000. They're not. I mean, y'all heard of this thing called Amazon,
right? Right.
Maybe if I don't know if you can get somebody for that or not, but
So one of my other questions, because and I've just been thinking about this personally, is I think one right now with the market that we're in, that the VA is actually got a heads up on people, right?
Oh yeah.
They really do, because one, sellers are having to pay concessions to sell their house, right? So you get a seller to pay concessions and you use a VA loan, you could walk away with not having to come to the table with any money
Yeah.
or very, very little. And possibly in some situations, depending on your rules and whatnot, you could get your earnest money back. You could get your appraisal money back. You can get that stuff back, right?
Everything he just said.
It's crazy.
I don't even have to
So,
talk. I'm done.
right, and that's just it. Is like, but you have to know that, right? As being a broker, as being a realtor, and even on your side, when we're talking to these clients, those are benefits for the buyers right now.
Right.
We're in that market that you've got to use those tools to help them, and if they can get it, if they can walk away with not having to put a lot of money down, that's only a more benefit for them. So I think that that's one thing that I think people are missing, that they're not pushing more VA.
You know, and I'm sure some of your followers and folks who are watching are going to be realtors. I'm going to look into one of these cameras, find which one it is, but
I think it's that one.
Guys, this is a government insured world that we're living in right now, right? If you a couple years ago, if you were all about, you know, if it's not a conventional offer, you know, don't even bring it. Right now, the conventional loans are far and few between, right? So we're in a government insured world when it comes to financing. And when you look at the government insured loans, to me, the number one is VA, followed by USDA, and then FHA. Like if I had to rate them, that's how I would rate them.
Well, I mean, even if you look at what Oklahoma has done this year, back in January, right? Back in January, they took $150 million and put it towards renters, right? Renters and investors. Why? Because the market for the quote unquote first time home buyer inventory is not there. Right. So your inventory is, our median is now I looked this morning, it was like 246, right? 246,000. That's huge. That's a huge. And most new homes start around that price point.
Most it's a challenge to find a house 230, 240 on the
yeah. I mean, and it's crazy. I mean, but the old first time home buyer house that was 150 is now 250.
Yeah,
it really is. So I think if we was to push that loan, right, the VA loan, and you can get them into that house, they're walking into a house with next to nothing out of their pocket. They really could.
And so when you understand the VA, so VA will finance 100% of the purchase price or appraised value, right? The lesser of the two. So if it appraises for less, you know, then that has to be renegotiated. Now the veteran, believe it or not, and this was the whole COVID thing, veterans can pay the difference.
Right.
If it appraises for less, they can pay the difference. The only caveat is they can't get it. It can't be gift funds. Right.
Has to be out of their account.
It has to be their money. Yeah. So it's 100% financing. You can get, they're very lenient on seller concessions. If you read the guideline or Google it, and I don't recommend you Google anything, especially health concerns. I had like 7 diseases last week. So yeah, I was like one itch and Googled that, and it was a rabbit hole. So, but yeah, don't Google this because you got to understand.
What is this
guideline.
red dot?
Exactly. Where was it is the question. So you Google it, says 4%. Well, that's 4%. It's just exclusively of buyer's cost, right? So there's things that buyers have to pay, but there's most of the costs that are related to a transaction are not necessarily buyer's cost. They could be a seller's cost.
Right.
So already everything that falls in the title column, that doesn't have to be included in that. So we've had loans that were smaller, right? That had 10, 11% in concessions if you did it on the percentage side, because we are working with dollars, right? They're capping at a dollar amount. And I would suggest to you as realtors, when you write your contracts, don't write percentages. Don't say 6% or 4% or anything like that. Always write
a dollar amount.
Always write it as a dollar.
Yes.
We're going to love you more. Your title company's going to love you more. Everybody's going to love you if you do that.
Absolutely.
Don't write a percentage.
Yeah. Just do a dollar amount, and it's so much easier. Yes.
So you get 100% financing. You can get concessions. Most programs, if you have excessive concessions, there's some builders out there that have been like throwing these stupid numbers out, right? $40,000.
And I'm going to ask you, when you keep saying concessions, because not everyone understands our language, right? What is a concession for That.
So anything that is given right to the buyer. In this case, it's normally they're doing a concession for closing costs, right? So they're giving them a credit for costs.
So they can pay for like my insurance,
They
right?
so there's we kind of put it in different categories, right? So there's closing costs that just occur one time: underwriting, processing, appraisal, right? The closing fee, their title fees, right? Title insurance, all those things only happen one time. Then you have some that people call prepaids, means that you're paying them at the time of closing, plus they reoccur. Those are that's going to be your escrow, right? Your first year of homeowners insurance. Then you're going to set up your escrow accounts. Sometimes you're going to hear term impound. It's same thing, but that's for your taxes and insurance. It's 1/12 of whatever the annual is. That just builds into a non-interest bearing account, right? Nobody wins on those. Now I will tell you, you understand why the lender wants to do this, right? Lenders don't really want to escrow. They prefer not to. But why it's necessary for us to do it is because if you don't pay your insurance, right? Now you don't have insurance. Then we have to do force placed insurance. We don't want to do that.
It's double the amount.
Yeah, it's not good because it doesn't cover any of your personal property.
No,
right?
nothing.
Nothing. It just only protects basically the structure. I always compare it to like a landlord policy. It's just the outside, right?
I'm going to replace that stud, but that's it.
Yeah, it's nothing. And then of course taxes. If you don't pay your taxes, obviously there's tax sales, and people can buy those, and so the lender will pay those even when the escrow account is short, or if your house is in foreclosure, right? The lender is still paying all this money out because that's how important it is. That's why we escrow,
right?
In fact, on most loans, if you do an escrow waiver, there's a cost or fee to it. So conventional loans, you're like, I don't want to escrow, I'm going to do it myself. Well, it's going to cost you a little bit. So there you go.
So on VA, right? Like you have FHA, you've got your limits and whatnot. What's the limit that someone can buy with a VA loan?
There is none.
Really?
There's a perceived idea that there's a cap on how much you can finance with VA, but there's not. You can do $1 million, $2 million, $3 million loan for it.
It all depends on what they're allocated.
It really, if you have full entitlement, it depends on what you can qualify for.
Right.
Right. Debt to income ratio still play into that calculation. I'm going to put a little asterisk here and let you know that VA doesn't actually have a debt to income ratio cap. The lenders are the ones that establish that. VA doesn't have one. They use something called residual income. You have to meet that. That's a whole nother conversation.
Okay. So like, I know that you guys will do some hefty ones.
Yeah.
What's your cap on that?
We cap it at 65.
That's huge.
Yeah, it's about huge. It's about 10% higher than most other places. Most of them will tell you, well, whatever DU or automated will approve. But when they're manual underwrites, usually they cap them much lower, usually 45 or 50%. We'll go as high as 65. And I had a conversation with a banker one time. And I was like, oh, well, why do you go that high? I said, there's all different scenarios where that might benefit the veteran. I'll give you a couple real quick. So a lot of times you have veterans that have income that doesn't qualify. All right. So a perfect example is they have overtime. They haven't been there long enough for it to be eligible. They got a spouse that can't be on the loan. Right. So that income comes out of the calculation. So you might.
That's that side chick.
Yeah. This guy. You can't have. You can have side chicks as a veteran if you want to do that. That's on you, but they cannot be on the loan and get 100%. Just so you know.
Hey, whatever works.
So,
but what if they live in the house?
It doesn't make a difference. Then they're dependent. We have to count that in the residual. Like I said, the residual calculation is a whole different thing. But there are benefits.
Going on the house in the weekends.
Yeah. The guys, just don't do that. If you're married, don't do that.
Oh,
all right. So let me have you better understand. It's like we need a counseling session here. You just flustered me.
Margarita machines this weekend.
Awesome. That's what I need. I won't be here this weekend. I'm gonna be in Georgia this weekend. Yeah. So my son is actually graduating from basic training at Fort Moore. If you guys don't know Fort Moore, formerly Fort Benning, so he's gonna be graduating. It's called Turning Green.
Congrats.
Right?
That's awesome.
So
that's awesome.
I already told him, man, you gotta listen. If you go anywhere else for your loan, I'm gonna disown you. You're out of the family. Gonna change your last
I know
name.
a good realtor. Just FYI.
Yeah. I don't know what state he's gonna buy. And who knows where he's gonna be at.
That's okay. I can still help.
So, but yeah, there's always, get back to this, with the DTI thing, there's benefits to having that. But you'd mentioned something earlier, talk about servicing, right?
Right.
So as a lender, we're never going to set the veteran up for failure, because if they fail,
You fail.
we fail.
And you
Right.
take the hit. You
Yeah.
take that hicking big time.
So, oh, well, VA is insures, right? Well, VA does. But, if you ever have a foreclosure, the first thing that happens is the file gets torn apart. I mean literally, it's like the audit from hell, right? They're gonna tear it apart, find any holes in it. So if you got holes in your file, right, you did things you weren't supposed to do. We're not talking about like fraudulent stuff.
Right.
I'm just talking about it may be just in the underwriting. VA's goal is to
Give it back to you.
find a hole and have you repurchase it.
Yeah,
not
you're
insure
buying
it.
that loan back.
So, they don't want to pay out,
No, absolutely. Absolutely. So yeah. So okay. Tell me something that you actually enjoy, because I know that you have a few people in your office that you work with. Do they understand that? Because not all of them come from the Air Force, the military. They don't come from the veteran side, right? But you have good people,
Yeah,
that work for you. Great, great people. And not everybody sees it, right? Like, no, not everyone gives the respect to VA people that they deserve. And do they prospect VA just as hard as you do? Or do they go after other stuff? Because you say that your office is roughly 70%. So there's 30% that is either the realtor's giving it to you, but your guys prospect also, because that's what you have to.
well, yeah, you're gonna say our marketing campaigns really talk primarily about
Right.
VA loans, and for when it comes down to marketing, you get what you ask for,
Mhm.
right? So that's what we ask for. We do have some of our real estate referral partners that send us their whole book of business, right? We're one of their, whatever it is that we're going to get a shot at it. But there are other ones that only, like, I know that there's all their stuff goes to this person, but if it's VA, it goes to David,
Right.
right? And when we talk about VA, as our team, right? My office, there's 4 of us on my team, and if you have a conversation with anybody, all right, you're going to find that somewhere in their family story is a military veteran,
Mhm.
right? So if you dig deep enough, all my people have a story somewhere, and if it's not recent enough for them to know personally or be a part of that, then they get to see the amazing things that we do, and they're excited to be a part of that. And if I haven't said this already, we've been together as our team for almost 5 years.
Mhm.
Right. So from the time that we launched this office in Edmond, we started off kind of just pieced it together in I guess really just a handful of months, like 6 months. When we came together, and we've all been together for that time period.
Ever since.
Yeah.
Ever since.
Which is unheard of. I mean, there's a lot of people moving around in the mortgage industry, just like the real estate industry. People are jumping because someone's got a cooler business card, or I don't know why they make the changes they do.
People like mine because my sign glows in the dark.
Your sign does glow in the dark. Exactly.
That's why people come to me.
Yeah.
Not really, but
So they're driving down the road. They're like, this sign.
So yeah, no, I think that's really special, the fact that you have that team that has stuck with you. I mean, that's awesome. You being the branch manager, you're the top guy, but everyone sticks with you, and that's one thing that I like. And we've built that business together. We've built that relationship, not just even in business, but outside of work, right? Like, one of the things that you like doing is having a party. Dude throws an amazing Halloween party. Amazing Halloween party.
Is that right?
He doesn't remember it, but
not this year.
So yeah, so okay, so tell us something about you that people don't know.
Man, there's so many things. I try to keep stuff, on the DL, man, because
No.
so yeah, so exciting deal. If we were talking about this earlier before we went on, is that your dad was prior Air Force. My dad's prior Army, sergeant major. So it's as high as you can go in the NCO level, right? So, so we spent a lot of time overseas. My mom's Greek. So if you want to get a side angle, see the nose, this is a Greek nose. So we got to spend a lot of time over there. In fact, as I was growing up, it was between 2 duty stations. It was between being in Athens we weren't at the Air Force base there, which is a Lenacon. He was tied to a NATO facility, but it was back and forth, just those two places pretty much until he retired.
Nice.
So I got to spend a lot of time overseas. And when I got back, people asked, how the chariots were, and and did I still wear togas and stuff like that? No, they don't. There's no chariots in Greece anymore.
We could probably make one. We can make it happen.
Yeah,
you don't live far from me, so we could just share it, go back and forth. So what about your kids, right? Like you were telling us earlier that the other one's about to graduate. Like that's amazing. What about the other ones? What are they doing?
So I've got one going to OSU right now. He's 21, so I do need referrals because OSU is not free, I hear. So they got a great billing department.
Oh yeah.
And then I have them, but then the youngest, we have a daughter, and she's 15. She goes to Piedmont. So,
yeah.
She's the last one in the house.
Right?
She is.
Yes.
She is. And
so y'all go everywhere with that thing.
Well, yeah, not just school cheer, but then we have to do competitive cheer, right? And again, I need
every weekend. This dude's like in Florida or something. I'm like, dude. He's like, yeah, I'm a cheerleader. I'm like, what?
Yeah, it's like built-in vacations throughout the year.
That is not a vacation.
And the bad part is none of it's covered by the gym, right?
No,
the parents cover it all. So
yeah, you're paying for it.
Yeah, I'll have to come up. I don't know how to write that off my taxes yet. So
call Rob. Tell him you need a raise.
Oh, if Rob's watching this, I need a raise. I'm gonna watch this.
Just a little something. Hey, help me out. Ask for sponsorship.
Well, in our industry, whenever you want to buy something, you just go, well, it's just one more loan. Right? That's what everything is. One more loan. Just need one more loan. You can afford that.
No.
Same way in real estate, right? Just sell one more house. There's one more house.
That true. I just I try and sell as many as I can, but
if you want to buy something big, it's just one more.
It is. I just I it was funny. I was talking to a gentleman last night at an event that I went to, and me and him were talking. He's a team leader, and he was talking to me about our industry, right? Like there's so many realtors that quote unquote think that, hey, I'm getting my license. You have so much freedom. You can just become an all-star, right? Well, the ones that fail are those ones that get their license are like, this works, right? If you don't treat this job like a 9-to-5 job, you will fail.
Yeah, I absolutely agree.
100%.
Yeah, loan officers are the same way, right? So most loan officers are considered outside salespeople. They might have a desk somewhere, but most of them don't show up.
Right.
And I don't mean they don't show up mentally. What I'm just saying is they don't show up physically. So, I can't operate from home. Even during COVID, our team went to the office. And we met there because we felt, and at the same time, it was nice to be able to have a conversation with somebody in the office next door. Hey,
right.
What's going on the right? And my dogs will bark at anything. I mean, I couldn't do a Zoom call. They were barking in the background. I was muting, unmuting. It was really bad. So, but I like to go to the office because I know when I'm there that I can focus on what I need to do. Having freedom of your schedule it's a gift and a curse at the same time.
I think where people fail is that they take too much freedom, right? If they have just say they have a listing appointment, but it cancels, right? Well, that's an hour that you had booked, so they don't do anything.
Casino,
right? Because they don't have to.
So
the casino blows some money, but rather than taking that time and prospecting and using that hour, that's where people fail, right? They don't take that hour and be like, hey, I've got some other stuff I can do. So that's the same thing with you, is right. And if you have a cancellation with someone that's supposed to be coming in and going over documentations, you still have plenty of other stuff that you can do, right? You can call your leads, you can call your realtors, because that's the relationship that you've got to build, right? Like that's part of your job, is your relationship with your realtors. So if you didn't call me or connect with me in some way, that 9-to-5, right? And you only did it whenever I called you and said, hey, here's the deal. Would you be as successful as you are if you didn't treat it as a 9-to-5 job? Because I know you do, because half the time when I drop my kid off, you're dropping yours off, and then you're heading to the office.
Yeah, I don't go back home and crawl in my pajamas for sure.
No.
I would say first things is that I never leave the office and felt like I'm done. Like I've done it all. Like I did it. I left it all on the table. It's all finished. I can go home and feel good about myself. I always feel like there's something left, and which is good because it makes me get up and go to work the next day.
Oh, absolutely.
Also, I did a 30-year mortgage, so like I'm motivated. Like I'm gonna be working for the next 30 years.
I'm paying for it for a while.
Right.
It's funny as I was talking to Mike about my day, like how it's just crazy. Yesterday I showed up to the office each time yesterday, and it was 5 to 15 minutes because I had to go do something else, right? And by the time I got home, it was 10:15. People don't realize that the dedication that it takes to do this job is it's connected to your work ethic, right?
Yeah,
tremendously, because there's so many of them that are like, I'm not doing that, right? Like, why would I do that? Why would I work 14 hours a day? Most people won't. If I call you at 8, 9 o'clock, you're going to answer the phone.
probably.
Like, you answer the phone, but that's where our heart and soul is in this business. And I think that that's a big correlation with your relationship, and why you are successful is because you're there for us. And that's huge. That's a benefit that we have, but it's not only a benefit for us, it's a benefit for the customer, because that customer, that's when they have those questions.
Yeah, if someone's calling me at 7 or 8 o'clock at night, it's important, right? It's no one's just calling to shoot the breeze at that point.
Right.
So we do that 9 to 5.
Mm-hmm.
Just do the breeze thing.
So one other thing I know about you is you like to smoke cigars. Is there a certain brand you like? Because this dude, so he's got a lake house because he's fancy, right? So he's over top, like he's on like the highest mountain in Oklahoma looking over the lake.
I don't know about that.
Oh, I'm going to show you. So like he always has whiskey and a cigar. What brand is it? Because everybody has their brands that they like that you've got to have.
Surprisingly, I don't have like a brand of cigar that I like. It depends on what I'm drinking, right? It's whether I want something a little sweeter, or if I want something, a little more bold flavor, more natural flavors. So I know it sounds weird, but their cigars have all different. Yeah,
it's got a blend.
Yeah, and then some of them are infused, right? So there's all and then of course, depending on what you're drinking with it, usually if I'm having,
you stop by the dispensary before you leave, is what you're saying?
I don't have anything. Not that infused.
I've got 2 of them right here.
I don't have glaucoma. My elbow does hurt. No, but I do enjoy that. That is a bad habit I picked up. So I would say I'd say
we all have it.
Yeah, everybody has a vice. In what I like about
mine's a margarita machine.
Yeah. I met the margarita man. So
dude, he's cool. Like I just texted him. He's like, all right. He already knows.
Yeah. Shameless plug for the margarita man in Oklahoma City. If you guys need a margarita machine, you give him a call.
Absolutely. Rob's a cool dude. Rob and Alan, either one.
They deliver it, they set it up, they come pick it up.
You don't have to touch it. Like they do it all. All you do is leave the alcohol there, and he mixes it for you, puts it in the machine, turns it on, you're good.
Unless you drink a lot, you do have to refill it.
You do have to refill it, and it does drain quite. I think there's a hole in it.
Just at your parties.
Yours was pretty empty by itself, so I'm just saying. Yeah.
Mm-hmm. Yeah. I never knew that you could buy a mini keg of a Fireball. That was
pretty cool. I did not know that either. That was pretty cool.
Yeah.
So dude had a Halloween party that was unreal, right? Like he's got he's got a okay, now I'm going to start telling on. So he's got a porch that's like on the second level of his house, right? And he's got this tent that's 10 by 20.
Yeah, probably.
Exactly. Yeah, 10 by 20. He's got like a fire pit in it. He's got couches in it. And we're all sitting there. It's warm and it's raining outside.
Can't leave the guests out of the rain. Come on.
Dude, completely surrounded in this tent on the porch on top of his house. Oh, yeah. Unbelievable. But it was really a cool party. I was honored to be there. So it was a lot of fun. Me and the wife had a lot of fun.
I appreciate you.
I did park in the mud, though.
We live right off the main road, so there's not a lot of parking.
No.
And I got a lot of concrete, so but I don't have that much. We didn't have concrete for 80 people.
Yeah, I'm talking. There the garage was packed, the living room was packed, upstairs was packed. Dude, there was people everywhere, everywhere. So yeah. How we doing on time? 35. Coming up on 36. Cool, cool. Um, so tell me, what is the shameless plug for you and your company? How can we reach you? Obviously,
Oh,
you're
wow.
huge on TikTok. You know, I'm blessed to be in your famousness. Was it infamous? Is that what they call it?
I don't think you want to be infamous. I don't know. Just famous is good. You could be that, but I'm not that by any means. If really for us in mortgage solutions, if you're our goal is to help veterans become homeowners, right? Well, homeownership doesn't happen without the path of the realtor, right?
Oh,
You need
absolutely.
that advocate, that fiduciary there. That's what real estate agents do. That's the service they provide. Um, so we spend a lot of time not necessarily talking directly to veterans, but a lot of times talking to the realtors and educating realtors. In fact, we do a CE class, so you're familiar with that, in order to help educate them so they become more knowledgeable, so they'll be a better service. Because believe it or not, there are veterans out there that have FHA loans and conventional loans, not because it needed to happen that way for other reasons, but just because they didn't know.
Right, and they used the wrong lender.
And someone didn't ask the right questions,
Hmm.
right? It's during that interview process you're asking those. So for us, so if you're out there and you're a realtor and you want to know more about VA loans or how we can help you, whether it be education or help your clients, give us a call. Mortgage Solutions Financial. We're in Edmond, our office in Edmond.
So you're local,
Yeah, we're local.
like
We're
right
boots on the
here.
ground. So now, if you have a client that's outside of Oklahoma, all right. So we operate in 46 states. I'm not licensed in all of them personally, but our company operates in 46 states. So if they're not here, we can find somebody for them. I do have multiple state license. So if it's Arkansas or Kansas or Illinois, Georgia,
It's all the places he
Indiana,
has rent
yeah.
houses.
So
I'm telling you, this lake house, man, it's crazy. So
we bought pre-COVID, right? So just so you know, we got it. We got
so
it when
you've
it was.
doubled your money, is what you're trying to say.
It to
Right,
realize the
right,
equity.
right. It's liquid right now. It's just liquid.
People say it's like, oh, I got a liquid asset. But I was like, just so you know, real estate is not a liquid asset because you have to pour it, right? Got to pour that thing out. Got to get the liquid out.
Uh-huh.
So you either got to take an equity line of credit or you got to sell it. So, but I'm not
True.
ready to pour yet.
True.
So I'm pouring out there,
True.
but I'm not. We're not pouring any equity out yet. only maybe some refreshments. Some refreshments.
It's that whiskey and the cigar.
Possibly both.
And the fireball keg.
Now, I've never had a fireball keg out there. You should never bring fireball to the lake. That's a terrible idea.
There's got to be a story behind that.
Uh, it's summertime, heat, boating, drinking, all terrible things. And I will tell you, and just so you know, as a boater and the operator of the boat, you got to be cautious because you drink.
Right.
It's just like a DUI anywhere else. So
And you might hit a tree.
And yeah, there's or a person or anything. Another boat. There's a lot of bad things that happen. So, but anytime you're not the person that's been drinking a lot, you get to watch other people.
Mhm.
It's extremely entertaining.
Oh,
and
absolutely.
so anytime Fireball comes out, you're guaranteed a good show.
Oh, absolutely. That's when you TikTok famous.
So you don't see any of that on TikTok. My TikTok is all business. All business. I don't put anything personal.
It's
on
that
there.
side TikTok one.
No, I do need to get a personal account. So I do that on Instagram. So if you want to, normally if you search David Dustmann for anything, it's most likely going to be me.
Right.
There is some like engineer, some famous dude that's named David Dustmann. He's wrote some books or something. That is not me. So take a good look at the face. This is me.
Head up.
Yeah. But no, usually you're going to find me, especially if you put David Dustmann and mortgage next to it, chances are I'm going to come up. So
awesome.
But
well, I just want to say thank you for joining. It's an honor, obviously. I mean, we've been friends, business partners. I support you guys 100%. I love the fact that you are here, right? Like I can come see you. We've had the clients that they need to come sit at the table and talk, right? You have that availability. So I do appreciate that, but I appreciate you coming on the show. You and Rob have been on the show now, and it's an honor. And I love the fact that you guys are a part of my business, and this is how we're going to grow. We're going to grow from this. And I know that we're going to grow from this. So I appreciate you being here.
Well, thanks for having me. It's been a bundle of fun. I could see why people would why they like to do this, just cut up and have a good
You're
time.
gonna miss actually Megan. Megan is coming on Saturday.
Oh,
Yes.
excellent.
Yes.
She's excellent. Plethora of knowledge.
Huge.
Pay attention.
Huge. So yeah, so I think me and her have been talking a little bit. So
That's
we're
awesome.
gonna
She'll
see
be a great guest.
see what we can do. But I'm gonna try and get her on here. So
Yeah, it's gonna be great.
so cool. See ya.